This is Alan Bush with the Daily Financial Forecast for Thursday, March 17th. Stock index futures advancing yesterday, even with the Fed announcing a 25 basis point hike in its Fed funds rate. Well, that was expected, although some of the rhetoric was a bit on the hawkish side, and yet stock index futures putting in a good performance. Also, we did see the indices, at least the S&P 500, advancing above a downtrend line. So technically, stock index futures looking a little bit better. Of course, it's the geopolitical issues that will dominate in these markets. Moving over to the currencies, the dollar index a little bit lower, and the euro currency trading higher. This after inflation numbers in the Eurozone coming in at a historical high in the most recent reporting period. Also, we had comments from the European Central Bank indicating that there could be as many as 2 rate hikes this year from the ECB. Also, we had the Bank of England holding its policy meeting today, hiking rates by 25 basis points as expected, although their rhetoric was a bit on the dovish side. And we have the Bank of Japan meeting tomorrow. Most likely, the Bank of Japan will keep rates unchanged as they have pledged. Also, it appears that interest rate differential expectations remain very bearish for the yen. So I think of all the currencies we're looking at, it's the yen that has the clearest fundamentals aligned against it. So any rallies in the yen should be used as selling opportunities. And in the interest rate futures markets, the Fed indicated that there could be 6 more rate hikes coming this year. However, the Fed did downgrade its estimates for GDP growth this year down to 2.2% from the prior estimate of 4% growth. So with that in mind, and central banks around the world, I think, less inclined to be so hawkish as they have been, I think that there will be policies from central banks that might be a bit less hawkish than what we had seen in previous weeks. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or ADM.